5 years removed from the financial crisis this month, many people might be wondering, how has gold been affected in those 5 years since? Well, here to talk about it is Anthem Blanchard. Anthem, thanks for coming into the studio with me today.
Oh, pleasure, Joe.
Usually we have you over on the West Coast. It's good to have you on the East Coast.
No, I'm glad I'm in town. Glad to be here.
So let's jump into it. Gold, has it really been affected by some of the financial changes, or what are you seeing?
Yeah, well, I think one of the biggest events that's happened recently has been the passage of Basel III this summer, and I think it's something that we haven't really seen a lot in the press about, and I think it's incredibly important for gold because in effect, it's changing the percentage, the haircut that banks are allowed to loan off of that gold from 50% as it is currently to 15%. Now, this is going to go into effect for the largest banks in January, and it's going to go in effect for all other financial institutions in January of 2015. So I think it's going to be a big catalyst for a big move in gold.
Sure, so people sitting at home who may be less familiar with a lot of the new financial restrictions, regulations being put in place, what's the easy way of understanding what you're telling?
Sure, so basically Basel III came about largely due to the 2008 financial crisis, and the Bank of International Settlements, which is the large, you could say, regulatory or kind of governing rulemaking body for banks globally, started analyzing the crisis and took a look in terms of which assets were more or less liquid. And it was thought prior that in a liquidity crisis that gold would be illiquid or would be more difficult to sell. And as it turned out, actually the opposite was true. Gold was incredibly liquid, and now gold is going to be weighted at the same weighting as Dow Jones Industrial stocks.
So you think this will add more demand to the yellow metal. What kind of demand are we really looking at? Meaningful?
I think it could be. I think even if it's a very, very small percentage of banks' existing reserve assets, if that's going to even increase even by 1 or 2% into gold, that there's only a finite amount of gold. And I think that we could see a big run up there, and it could also be a catalyst potentially to spur banking products that have something to do with gold. So I think it's going to be an important development. It's ultimately, gold is the only non-financial core reserve asset that a bank can actually hold. So, I mean, other than a mortgage, I guess you could say with real estate, but gold is entirely interchangeable, and it is much more liquid.
Well, thanks again, Anthem, so much for being in studio with us today.
Appreciate it. Thank you, Joe.
For The Street, I'm Joe Deaux.